Hi all, welcome to today's video. Today we are covering two important terms, capital and revenue items. For income tax purpose, a clear understanding of the distinction between these two is very essential. So here we may go for the accounting rules regarding the distinction between capital and revenue items. So we can look what are the important differences between capital and revenue items. So of course, we can classify capital and revenue items as capital expenditure, capital receipts, revenue expenditure and revenue receipts. So we can move to our discussion now. Capital expenditures are those expenditures which are incurred in connection with the acquisition of fixed assets or in addition to a fixed asset, or which will improve the earning capacity of a business. So, ഏറ്റവും സിമ്പിളായിട്ട് മനസ്സിലാക്കാൻ we can say that the purchase of fixed asset is the best example for capital expenditure. That is incurred for the acquisition or the improvement of the fixed assets. That is non-recurring in nature, and the benefit of capital expenditure extends beyond one accounting period. Benefit is available for a long period, or that will help to increase the earning capacity and efficiency of a business. So it is clear now, capital expenditure is an item which will increase the earning capacity of the business. Clear now? Revenue expenditures are incurred for day-to-day running of the business or for acquiring goods for the purpose of resale or for maintaining the earning capacity of the business. The best example is cost of goods purchased for resale. Expenses incurred in connection with the day-to-day conduct, for example, salary, wages, all these are revenue expenditures. These expenditures are incurred by the company in order to maintain the earning capacity of the business. So here the benefit of paying salary, benefit of paying rent is for one accounting period, one financial year. The benefit is available for one financial year. These are recurring in nature. Okay. Now we can move to what are capital receipts and revenue receipts. Capital receipts of a business concern denotes capital invested in the business. Proceeds from loans and proceeds from the sale of fixed assets, etc. can be treated as capital receipts. Means these items do not arise from the normal trading activities of the business. The example is clear now. Capital invested, proceeds from long-term loans, proceeds from the sale of fixed assets. എന്താണ് capital receipts. Revenue receipts are the amounts received in the ordinary course of business. The best example is sales, sale of goods, commission received, interest received are the examples for revenue receipts. So the term is clear to you now. In some cases, revenue expenditures become capital expenditure. For example, repairs are revenue expenditures, recurring in nature. Suppose if the company makes a major repair and the benefit of such repair increases the earning capacity of the business or the efficiency of the business, in that case, the repairs will be treated as capital expenditure instead of revenue expenditure. So the main thing is, if a particular expenditure increases the earning capacity of the business, that is of course capital expenditure. If a particular expenditure maintain the earning capacity of the company, then it will be revenue expenditure. Then we can look what is a capital profit. That is the profit coming with capital receipts. Capital receipt, the best example is sale of fixed asset. At the time of sale of fixed asset, if you are receiving a profit, that is capital profit. Capital losses are the losses arising with capital receipts. For example, if you are selling your fixed asset at a loss, that loss is capital loss. So what will be revenue profit? Revenue profit is the normal profit from the trading activities of the business. Revenue losses are those losses which arise from the normal course of business. Loss on sale of goods. Clear? So the terms are clear to you now. Capital and revenue items. Capital items are sometimes one-time happening expenditures or incomes. Revenue items are regular items. Revenue expenditure or revenue receipt. These are regular items. That is the basic difference between these two things. I think it is clear to you. So that is important. The distinction between capital and revenue is very important for income tax purpose also. So here we evaluate the distinction between these two items from the accounting point of view. Commercial principles we will, general commercial principles we will apply. So that's all about today's class. Thank you for watching. Thank you all.